Good Tuesday morning, everyone. Kip Harrods here with your daily VRA Midday Investing Update. Hope you're all having a good day. Hope you had a great long Memorial Day weekend as well. What a week last week was. Look, we just witnessed over the last 2 weeks, what looks to have been a textbook basing and reversal pattern. Now, it wasn't perfect as far as the bottoms go, but everything else from the internals to investor sentiment, to the way the rally took place with semis leading, right? NASDAQ leading, a great smart money hour. These are all the things that you look for, and we got them all. We got almost every one of them. So we opened after last week, by the way, after 7-8 straight weeks of really ugly action, meaning every week was down for every major index. Last week was up, of course, as you know by now, probably up big, 6% plus across the board. And this morning, look, it was going to give it all back, didn't it? Dow Jones was down over 400 points at one point. And, man, it's just coming rolling back. Just as I'm speaking now, NASDAQ's just going positive. Semis went positive a few minutes ago. Again, that's what you look for. Now, Dow Jones is only down 90 now. Look, this market has got a lot of wind at its sails, at its back. It just does. And I think leading that is going to be what we've seen continue to happen. Much better internals, right? Good market leadership. The fact that we fell 30% plus. Most stocks down more than 50%, right? But we didn't have a recession. We haven't yet, have we? So we discounted a recession that we've not had. And we don't see one happening. The economy is still very strong. And certainly not this year, maybe not even next year, you know? Corporate earnings, I think, for this quarter are going to be very good. So I think the market gives us a buying opportunity here. I think that's what it looks like. I've got some data to back that up. We've been talking about for the last couple of weeks here, since May the 12th, two tells that we're watching very closely, and they're really holding up well. This is going to be for you investing nerds out there. A couple points here. First of all, we just had back to back. That was Wednesday, Thursday, Friday. NYSE up volume days of 80% plus. That's very rare. All right, that's very rare. It's only happened 3 times since 2010, and every time it's happened has been a major buy signal. It's really started the beginning of a major move higher in the market. So that was very good to see. Very rare. Also, beginning on May 12th, we started pointing out 2 tells to you that we were watching. We thought that were the market keys. ARK, Cathie Wood's Innovation Fund. ARKK is a symbol, and SMH, the semis, SOX, the SOX, right? You can use the SOX index, you can use SMH, the semi ETF. Both bottomed on May the 12th. Since then, they've led the markets higher. As of Friday's close, let me give you the numbers. First of all, the semis fell 32% in 4.5 months. Cathie Wood's ARK fund fell 77% over 15 months from the February 21 highs. Since then, since May 12th, SMH is up 14%, leading the way higher. ARK is up 31%. I think these are the two that we're watching here, at least, to tell us whether or not we have a final low in place. If those lows are broken, we're still in a bear market. That's the point here. But if they continue to move higher, the odds continue to increase that this bear market's over. I believe it is. I believe that we've seen the lows. We've said that for a while now, that most stocks have seen their lows. Again, it's been a brutal bear market for over a year. Most stocks have been in a bear market for about a year. Okay? It's been a under the surface bear market, right? That's really destroyed most companies, while just a few companies held the major indexes up until this year. So that's what we're watching very closely here. Also, I think this is interesting. Back through history, right? The Nikkei Dow, when it collapsed in the early 90s, yes, I was around then, the Nikkei Dow fell 75%, okay, from its high to low, 75%. The dot-com, when we had the dot bomb, NASDAQ fell more than 75%. And now Cathie Wood's ARK fund just fell more than 75%. All right there. Folks, this is like history repeating, but not rhyming, but actually repeating. Those are almost identical declines from market leaders at the time, right? Nikkei Dow, NASDAQ, now Cathie Wood's ARK. And every time they bottomed, that was the bottom. And a massive move higher began in all these markets. Also, Again, this is the third bear market we've had in 4 years. Almost no one's talking about this. This is a big deal. First was 2018, right? Again, the average stock fell more than 50%. What happened the year after? S&P 500 was up 40%. NASDAQ up 44%. The semis up 79%. Those are all great returns, but the best, of course, was from the 2020 bear market. 1 year later, again, when these lows were in, that was it. Didn't retest, boom, we went. 1 year later, S&P 500 was up 77% following the 2020 bear market. NASDAQ up 100%. Russell 2000 up 131%. The semis up 131%. Again, if we get back into history repeating and rhyming here, right, then we might be looking at one spectacular move higher in the markets over the rest of this year and into 2023. A lot of powerful trends happening on this surface, right? With obviously the midterms coming up, the fact we've already had a brutal bear market in most stocks, and of course investors could hardly be more bearish, right? As I said many times, I fault no one for wanting nothing to do with this market. We've had 3 bear markets in 4 years. Stocks have been destroyed. Unless you're a market timer or nimble and you're trying to time this thing, and unless you're good at it, you've been destroyed. Long-term investors, buy and hold has sucked, okay? So again, I fault no one for wanting nothing to do with this market. But smart money investors know that you look back at recent history and you go, okay, this has happened. This may be the new thing, right? We're going to have bear markets more often, and they're going to happen faster, and they're going to be over faster. And then we're going to zoom higher again. These are the kind of patterns that smart money investors start to look for. And I can promise you this, if I'm doing this work, if Tyler and I are doing this work, we're talking about it, we're writing about it, we're not the only ones, right? All right, folks, that's it for the day. Again, the internals are really good today. NASDAQ now up 40, semis leading the way. I see on the Fibonacci retracement levels and to get back to the 50s, the 100-day moving averages we wrote to our clients this morning. I think we have a rally that continues at least 4 to 6% higher from Friday's close. That's just short term. One of the things to watch very carefully is stochastics. This is one of those insider tricks of the trade here that's really made people a lot of money over the last year and a half. Once stochastics hit 90% on an index or ETF, that marked the top almost always. So watch that. Watch stochastics. Your favorite index or ETF you're invested in, not so much for stocks, but indexes and ETFs. When they get 90% overbought stochastics, you might want to think about either taking profits or hedging maybe, or maybe just stop buying that particular index or ETF until it gets cheaper. All right, folks, that's it for the day. Again, I hope you have a great rest of your day. Please join us at the close for our VRA Investing Podcast. Until then, we'll see you back here again tomorrow morning.